Thank you very much. And here we go. The first of our 10 finalists, David Kedmey from EidoSearch. Come on up, David. Right there, grab the microphone. There you go. Yeah.
Try the other remote.
The other remote.
Or I can just signal.
Okay. Is the remote not working? Is our remote not working? So who's from out of town? Okay, just give him a wave when you want to advance it.
Okay, sounds
All right.
Hi, everyone. I'm David Kedmey, the president and co-founder of EidoSearch. I'm waving to my remote over here.
There you go.
Okay, EidoSearch makes deep financial research easy using content-based search. It's a new technology, and what it does is saves people time and helps people to discover hidden relationships in large data sets. You want to go to the next slide? So let me give you a concrete example of content-based search. This is a simple example. Take the rate of unemployment. It's been declining in the US for the last 12 months. So without formulaically describing that curve, you can use the graph itself or the data underneath directly as your query. We'll find every time from 1950 to today when you had a similar environment of declining unemployment. That way you can answer important questions like, what does that imply for the S&P? Well, it turns out on average the S&P is up 2% in the next 1 month following these periods. Now I can get that answer in a couple of clicks in a few seconds. That's important information to a portfolio manager in their asset management decisions. Now, by analogy, take Pandora. Pandora is content-based search for music. I like the Rolling Stones. So I go to Pandora Radio, I type in the Rolling Stones, and without articulating why I like that music, Pandora retrieves similar music, Led Zeppelin, Jimi Hendrix. Now, how is it that Pandora can do that with so little input from me? The way they do it is they have a music genome. The genome is comprised of hundreds of elements that get at the essence of music. That's what's used to retrieve the similar music. Now, we have our own genome. It's not a music genome, it's a signal genome. These are thousands of elements that get at the essence of time series data, things like the roughness or the smoothness of the curve. That's what allows this very intuitive, powerful, quantitative interaction. Can we go to next? So we're going after large financial institutions, mutual funds, hedge funds, investment banks. We already have, as a paying customer, one of the largest mutual fund sponsors in the world. We also have one of the largest currency brokers as a customer, and we've got a lot of great traction at the major investment banks and hedge funds. This is an enormous market. $400 billion is estimated to be spent on information technology in the financial services industry. Okay, if you take the enterprise value of the firms that serve that market, the top 10 firms, Bloomberg, Thomson, FactSet, they have a combined enterprise value of $90 billion. And here in Ontario, it's estimated $6 billion will be spent on information technology and financial services. So at each institution, they spend tens of millions of dollars on data and analytic tools. This is to support an army of quants, traders, IT staff who are pursuing endless trade ideas. It's not the number of ideas that is the limitation. It's the tools and the amount of data that they grapple with that forms a bottleneck. We solve that bottleneck, and I want to show you how. Okay, here's how people do things today. This is a simple question made complex by the tools that we have. I'll translate it for you. Okay, so you're a trader, you see Microsoft spiking. When Microsoft spikes a lot in a day, relative to the last 1 month trading, what tends to happen in the next 1 month? Okay, so you can code, or you can not ask the question at all, or you can use our system. This is Microsoft, its price about a 1-year period. I'm going to zoom into this rectangle. And here is Microsoft, flat for about a month, spiking. Okay, 1 click, and you get a table of results. What we've done is we've taken that pattern, that price pattern, and we've searched back along Microsoft's history and in every other stock in the relevant universe to find the best matches where you had similar price behavior. Okay, click again. Here are 8 of the results from that table of results, which you get in seconds, flat, spiking up. One more time. And you've got your answer. That's 3 clicks to get to your answer. 1 month after this particular price behavior, historically, you can expect a 2.5% return above market. That's what the data tells you. Now, this interaction is so intuitive and, in a sense, simple, it almost belies the complexity of what's going on underneath. It's computationally intense to take an ambiguous query, find me something like X, search over a large database, and quickly find accurate results. So how is it that we're able to do this? It's because of my partner, Professor Xiaoping Stephen Zhang. Stephen is a professor of electrical and computer engineering at Ryerson University. And Stephen and I met at the University of Chicago. We were in business school together. Prior to Chicago, Stephen had a whole career, both in academia and in industry, applying content-based search to the Human Genome Project, to EEG analysis of brainwaves. When we met at the University of Chicago, what we realized is these techniques are ideally suited for financial data. So upon graduating, Stephen came back to the university, assembled this team. We received substantial grant funding, NSERC, I2I. We recently received OCE market readiness, and built the product. And here's what we found. There's great demand for this capability on the street, and there's broad application across many different styles of analysis, many different types of funds. Let's flip through a couple of slides. I'd like to go, I don't think we have time. What's that?
Oh, it's working now.
Okay. I'm not sure we have time to go through all of the analysis. Let me give you one example. Okay, here's asset allocation. So take crude oil. You want to create a basket of stocks that trade sensitive to crude. Well, you can go about this in the usual way and pick the usual suspects, Exxon, BP, or you can let the data tell you what's most sensitive. So this is crude over the last year. That's your query. Search 30,000 stocks around the globe and come up with a ranked list of results. This is the discovery element of search. You'll find stocks, some of which are to be expected. Others are news to you. So that's asset allocation. Momentum. Okay, this is the British pound to the Japanese yen. This was published online not long ago by FXCM. So you see the two currencies, the yen rising, sorry, the euro rising relative to the yen. With a quick back test, you can find each time that that's occurred and have some quantitative information behind the way people make decisions anyway. Ask a trader, why did you make a decision? It's often, I've seen it before. This is a systematic way to do that. It gives you the information that's there in the data. That can't be ignored. Pairs analysis, last example. This is a big data example. So in the S&P 500, there are 250,000 potential combinations of stocks. That's one stock divided by another. What we can do is take that pair between the two stocks and find others that are trading relative to one another in a similar way. These are three different pillars in finance. We have applications in each one. Okay. So here's a list.
David, I'm going to ask you to pause for just a second. Do the judges want, we have about 2.5 minutes left. Do the judges want to jump in with questions, or should I let David continue? Okay, David, another minute, and then I'm going to ask you a question.
Okay, sure. So here's a list of strategies. It's just a sample that are deployed at the large institutions where we can have an impact and currently do. So I'll just sum it up this way. The great financial tech companies of the last 20 years, it's been about data, more data. But now we're overwhelmed by the data. And what's important isn't the raw information itself, it's the relationships in the data. So the great financial tech companies of the next 20 years It'll be those firms that bring the relationships to the surface. That's what we do at EidoSearch. That's why I think we'll be the next great fintech company that comes out of Canada. Thank you.
So, David, to pick up on what you just said, do I understand correctly that this would have the result of democratizing this kind of analysis, that rather than it being really complex and kind of esoteric, it would be something a greater number of analysts could do, or did I misunderstand that?
Yeah, you're right. So one application is just literally democratizing quantitative analysis. You've got the experienced trader, and now you've put in the hands of the experienced trader the ability to do deep quantitative research. And so you put that together instead of it traditionally being separate in a bank. It's also very powerful for the quant. So somebody who has programming capabilities, right now the procedure is you come up with a hypothesis, you build a model, you test statistically the validity of that model. That's not efficient. You can't explore an idea. Right. This, you can explore many ideas.
And what do you think will be the outcome of that for our companies? You know, if we're dealing with too much information as it is, and if more people now have access to information and are going to be analyzing information, you're suggesting that's a good thing. It could be argued that, you know, it will lead to a lot of people trying to make the same decision over and over again. Is democratization a good thing in this context?
What this allows is for the variety of ideas that are out there to be explored. It's not about more information. It's about honing in on the pieces of information that matters and can help you to make a more informed decision. So there's a benefit to it.
And the potential market, just to wrap up, is any analyst who has access to your technology and the data. Is that correct?
Yes, it's a subscription model, so it's over a browser. All you need is a login to use it.
Okay, great. Thank you very much, David.